Hey guys, so I thought I'd make a really quick video on the S&P 500. Now, you can see I have slightly moved this arrow from my last video, where I do believe we're now coming into the trap week, or the week before the actual trap week, as we've broken underneath the 33 fair value band on the weekly time frame for really only the fourth time this cycle. Now, this is also pretty much the the second time this cycle where we've closed a month with the monthly BX trend red. The only other time we had that happen was March of 2025 when we had the Trump tariff trade thingy-majig, taco trade, where Trump said something, bounced, and then the market just capitulated again. Anyways, because the monthly BX trend is red, I'm going to ignore all of these corrections, where even if we broke underneath the fair value band, the monthly BX trend was still green. So hence, I believe we will probably come down to retest the -1 standard deviation band on the weekly time frame, and we're going to have a trap that lasts either this week, next week, potentially a week longer, who knows, history doesn't have to repeat exactly, but it's going to rhyme. So I do believe we're going to see a absolutely monster capitulation week, potentially, like a 10-12% week to the downside. And if we bring out my price range tool, if I anchor it to, let's say we bounce to 6,600 and then we correct a little bit. So let's say this week, we close it at 6,600. Then next week, maybe we'll make an attempt into, say, 6,700, but we end up closing that week down a full 10%. That would bring us to 6,000 points almost exactly. And if we have a look at that full range bar, that was 11%. And if we get a repeat 11%, that would take us to just under 6,000 points, which is just above the -1 standard deviation band. And obviously, the capitulation week doesn't have to mark the low. You can see the next week can go lower. So maybe that next week is the one that gets us from 6,000 to 5,800, maybe 57 or even 5,600 points before we see a quick recovery out of there. Now, I'm now going to enjoy not having a mouse, using a trackpad to try and take us back to the 2008 GFC and to show you guys what happened. So I did talk about this in a previous video where you saw a monster sell-off in August 2007. It pretty much double bottomed. I believe it looks like it made a slightly higher low from that March 07 peak. Yeah, so, but compared to this, I guess, scare in May and June of 2006, you can see red monthly BX. In this case, we've got red monthly BX. So we have this absolutely monster scare, and then the stock market goes on to make a slightly higher high, only just taking out the previous high. But if you manage to get bottom to top, that's, still a 15% move. And if you got in from when the monthly BX first turned green, you would have still made, around 8.3%. And that was pretty much the end of the cycle. So if we come back to the present day, as I work my trackpad slowly, you can see we've already broken this November 2025 low. So potentially we're tracking slightly weaker than 2008, which is something that Jason and Michael have been talking about on their channel, saying that how this recession could end up hitting harder because we've pumped harder in the lead up. The higher it goes, the bigger it falls, or however that saying goes. I probably mad butchered it. But let's say we bottom at let's just say 5,800. We just break that 1 week fair value band. And if we were to get a 13% move, that would only set us up for a lower high. So price would pretty much come back to roughly where it was last week. And that is something that Jason and Michael have potentially been stalking over on their YouTube channels and talking about in a bit more detail with members. Now, whether it ends up being a lower high or a higher high, I'm not sure. But I obviously want to trade the bounce and get set up for a long-term short position. Now, if we were to bounce to higher highs, we would need around a 22% move up, which we got more than that in the last move out of the April 2025 low. So even if this move does around half of it, so around 21.65% compared to 43.13, it would still just take out the previous highs and it would break, 7,000 points. Again, have we broken 7,000 before? I believe we've just broken it. Yeah, on a wick. So I'm obviously watching for a major flush out after a bounce. And then I'll be riding the next leg up. Wherever that top comes in, I'm going to hopefully sell close to the top, somewhere in that range, and get in on the big short. Now, obviously, we do know it's very likely the stock market continues to run into 2027. So even though I've just shown you the 2007-2008 analysis, it's potential that even though history doesn't repeat, it's going to rhyme. So we may not see everything happen as quickly. It might take longer. So instead of this massive V-shaped recovery, maybe if we do come down to 5,800 points, we spend, 7, 8, 9 months grinding slowly back up like we did in like July through to February. We slowly grind up to maybe we hit 7,200 points. Who knows? And then we roll over and that's the top. That's just a few theories I'm throwing out there, but you can clearly see Peter DiCarlo over at Traders Helping Traders thinks exactly as I do, that we're going to come up, form a lower high, and reject. Now, he's obviously pushed out a whole bunch of tweets and YouTube videos, so make sure you go and watch those. I'm obviously not going to cover all the Mag 7 and stuff, because, he's covered it, and he probably does a better job of talking than I do. But if you have any specific stocks that he doesn't cover, Jason and Michael don't cover, that you want me to cover, please drop it in the comments below, and I will happily use all of my indicators and trading strategies and review it for you. Thank you for watching. Please like, comment, and subscribe. Goodbye.